Hey, good morning, guys. It's Simon with Trade and Perform Coaching. Wanted to do a quick coaching tutorial on using the red stars. This is this morning's trading in real time, and so um, the focus on this is scalping and in the direction of the momentum. So, what we're going to use to determine when we're in momentum is the gold line, which we call the golden line. It's the 200 period moving average. This is a 24 tick chart. The purple is the 400. It's more of reference. You can see it's basically trading sideways. And then the 100 period moving average. And what we want is we want to see the market trading above at least the 100 and preferably above the 200 as well. So what you see here about 5:30 in the morning, what the stars tell you is there's been an excessive push to the downside. So let me explain this. You'll see back over here, you go way back, because just about right here you can see it's pretty clear that the 100 is about to clear through the 200. So look at the stars that worked, and we're focusing the least aggressive trader would want the star on the turn bar. The a little bit more aggressive trader could use that star on the second bar. Okay, so as we go through the night, this is just before London Open. This is the 100. I'm going to circle this so you can see me. This is the 100. This is the 200. So you can see that I impulse move here underneath both moving averages, right? And it gets saved by the 400. We then push back up, right? And this bar right here, that white bar, has a white square on top of it. But most importantly, there's a red star. I'm going to make sure you can see that. So these red stars do not, none of the algos print and then reprint. Once it's there, it's there. So you enter here. The stop is 24 points. So that's $480 per contract or $48 per micro contract. This is the NQ, right? So your goal is to enter and scalp your initial portion and leave your trailer for the runner, right? So you'll see you enter here, and we get an initial move so that you understand what the P&L is here. You enter here, 24,913. It retraced 24,924. So you took roughly 10 points or $200 a contract in heat, and your maximum favorable excursion, which pushed right into that. Again, I don't use the 400 period for much. It's just a reference point, but it pushed down into 24,886. The reason this is important is because from 24,913 to 24,886 is, let's just call it roughly 25 points for math, right? That's $500 per contract on NQ, right? Again, if you're trying to build an account, you want precision in your entry. Your next red star comes right here, right? Red with a blue square. So all these algos mean something. We're going to focus purely on the red stars on that particular trade. Again, it's meeting the key criteria of under the 100 and under the 200. 24,907. You're going to have roughly a 32 stop on that. So it's going to have to really push against you to stop you out, right? 907, 17, 27, 32. Okay? And your maximum favorable excursion on that first leg down takes you from 24,907 to 24,856. That's 50 points. This little leg right here is $1,000 per contract or $50 per micro. Excuse me, or $100 per micro on this little leg right here. Okay? Then it comes back. And what you're really trying to capture is the first 3 stars on the turn bar, 3 to 4 stars on the turn bar, but no more than that. Especially when we're in a up market, the continuation down tends not to continue. This trade right here becomes trade number 3. It's the last one I'm going to cover. Right, red star, white bar down. Again, your risk is about $500, 24,870, and your maximum favorable excursion, you would have covered it right into VWAP there at 24,830. So it's 870 to 830, which is 40 points or roughly $800 a contract, or $80 per micro, right? Then as you come over here, that's 3 down, right? So what you're looking is to get above that 100 and the 200, right? So the first thing that you would look at, because I was trading this and I went, man, there's no red star up on the turn. But what you'll notice is when you're early in over this 100 and 200, I will usually take the risk on the first star up. Doesn't always work. That's for very aggressive traders, but you can see clearly that's about a 50-point move there. It's 21 to 70, so that's $1,000 a contract. But if you just stay on the most conservative process, right, you're looking for the first 3 trades that fire above the 100 and the 200, and this is your first trade right here. This is your stop. That's roughly 24,910 to the first leg is 24,936, right? So 26 points, that's $400 a contract or $40 per micro. And this is trade 2 on the star again above the 100 and 200. Your entry there is approximately 24,915 and stretches you up to 24,960. That's the analysis. And once it fell below the 100 and the 200, I am no longer interested in trading it. As a matter of fact, now I'd be looking for a push back. Again, usually when you get underneath that 100 and 200 the first time, you can see here that first star up will push. I would really rather have a retrace for a push back up, but we have pushed underneath both the 100 and 200 and that first star down. If you're a super aggressive, you're short at 24.92 and you're currently trading 24,881 or about $200 a contract. Okay, this is Simon with Trade and Perform Coaching. If you'd like a 5-day pass to the room, just message me, Trade and Perform, TRADE, the letter N, perform at gmail.com. If you want a true edge in trading and indicators that don't write and then magically erase when the trade doesn't work out, right? They all stay there, and they stay there for a good reason. So have a great day, guys.